highly paid, loyal corporate employee relying entirely on a single paycheck is taking a mathematically larger, more irresponsible financial risk than a speculative stock market trader. Relying on one company to fund your entire existence is a single point of failure that mathematically guarantees your absolute ruin during an economic crisis. Society has programmed you to believe that securing a stable, traditional job is the ultimate form of financial safety. You have been taught to trade your finite time for a predictable salary, avoiding the volatility of entrepreneurship and investing. But the dark truth is that your predictable salary is an illusion. It is a fragile structural trap designed to keep you obedient while placing 100% of your financial survival in the hands of a corporate board that sees you as an expendable liability. The global economy is currently undergoing the most aggressive structural shift in human history, and the financial window to escape this fragility is closing today. If you click away from this video and continue to blindly trust your corporate safety, you are voluntarily signing a contract to be completely wiped out during the next inevitable economic contraction. You will operate with zero margin of error, and you will bleed your savings to zero the exact moment your employer decides to restructure. Cost of ignoring this reality is the absolute destruction of your financial ecosystem. But if you stay, I will reveal the clinical architecture of silent leverage. I will show you the exact psychological blueprint the 1% uses to reject the illusion of a salary, eliminate their single points of failure, and build unbreakable equity that cannot be fired. This is the financial reality the corporate matrix desperately wants to keep hidden from the working class. The turkey illusion. To understand why a safe job is a time bomb, you must fundamentally change how you evaluate risk and certainty. Risk management expert Nassim Taleb illustrates the illusion of safety through the paradox of the turkey. Consider a turkey that is fed every single day by a farmer. For 1,000 consecutive days, the turkey observes that the farmer arrives with food. Every single feeding reinforces the turkey's belief that the farmer loves turkeys, that the environment is perfectly safe, and that tomorrow will be exactly like today. Turkey's confidence in its safety is at its absolute historical maximum on day 1,000. But day 1,001 is Thanksgiving. On that day, the turkey experiences a catastrophic, unexpected event that completely permanently destroys its existence. The turkey mistook a consistent pattern for absolute safety. It confused the absence of volatility with the absence of risk. This is exactly what happens to the modern corporate employee. When you receive a steady paycheck every 2 weeks for 5, 10, or 15 years, your brain becomes conditioned to view that income as a fundamental law of physics. You experience zero volatility in your income, so you assume you have zero risk. You buy a massive house, you finance 2 luxury cars, and you send your children to expensive schools, all predicated on the unbreakable assumption that the bi-weekly paycheck will never stop arriving. But the corporate employee is the turkey. You are operating in a highly complex, chaotic global economy, yet your entire survival depends on one single variable: the mood of your boss and the quarterly earnings of your employer. You have a single point of failure. If that single variable fails, if there is a pandemic, a global recession, or a simple shift in corporate strategy, your income does not drop by 10%. It drops by 100% instantly. Stock market trader who holds 50 different assets experiences daily volatility, but they are protected by diversification. If one asset collapses, they survive. The employee experiences zero daily volatility, but they are perfectly fragile. One mistake, one economic shock, and they face absolute ruin. The 1950s anomaly. If relying on a single paycheck is so mathematically dangerous, why does the entire middle class worship the concept of a safe job? Because we are operating on an outdated psychological software programmed during an economic anomaly. In the years following the Second World War, the global economic landscape was entirely unique. Europe and Japan were rebuilding from total destruction. The United States was the only major industrialized power left with its manufacturing base intact. This created an unprecedented era of economic dominance. From the 1950s to the 1970s, the American middle class experienced a period where a single, stable job at a major corporation could practically guarantee a comfortable life, a home, a pension, and absolute security. During this brief window in history, the corporate ladder actually worked. Income equality was at its highest point, and the cultural expectation was that if you were a loyal employee, the company would take care of you until the day you died. But that era is over. It has been over for decades. We now live in a hyper-connected, globalized, winner-take-all economy. Technology and software are actively consuming traditional industries. If your job relies on repetitive cognitive tasks or basic management, you are no longer competing with the person in the cubicle next to you. You are competing with an algorithm, and you are competing with a global talent pool that is willing to do your exact job for a fraction of the cost. Despite this brutal new reality, the expectations of the middle class have not changed. Your parents and your grandparents taught you to seek a stable job because it worked for them. But applying 1950s financial advice to a modern digital economy is financial suicide. Social contract between the corporation and the employee has been completely severed. You are a line item on a spreadsheet. When the next recession hits, the board of directors will not hesitate for a single second to protect their equity by eliminating your salary. If you continue to play by the rules of an economy that no longer exists, you are designing your own failure. Margin of safety mandate. The most devastating consequence of the safe job illusion is that it destroys your margin of safety. In the psychology of wealth, survival is the ultimate metric. Making money is entirely irrelevant if you cannot keep it during times of chaos. Warren Buffett and his mentor, Benjamin Graham, built their empires on a concept known as the margin of safety. Margin of safety is the physical and psychological gap between what you expect to happen and what can actually happen. It is the realization that the world is governed by odds, not certainties, and that you must build a financial fortress thick enough to withstand the worst possible outcome. When you rely on a single corporate paycheck, and you use that paycheck to fund a luxury lifestyle filled with debt, your margin of safety is exactly zero. You are betting your entire future on the impossible assumption that everything will go perfectly according to plan. But the most important part of any financial plan is planning on the plan not going according to plan. Economic history proves that the world breaks on a regular basis. Markets crash, pandemics halt global trade, companies go bankrupt. If your financial ecosystem requires a continuous, uninterrupted flow of a single salary just to survive, you are incredibly fragile. You cannot survive a gap in employment. You cannot walk away from a toxic boss. You are trapped. The elite understand that true financial security has absolutely nothing to do with how high your salary is. Security is derived from how long you can survive when the salary inevitably disappears. Having cash reserves, avoiding consumer debt, and refusing to inflate your lifestyle are not just conservative strategies. They are offensive weapons. They give you the flexibility to survive the economic winter that wipes out your highly leveraged, single-paycheck peers. Margin of safety is the only effective way to safely navigate a world that is fundamentally unpredictable. The law of permissionless leverage. If the traditional job is dead, how do the true 1% protect themselves from sudden financial ruin? They refuse to trade their time for a linear salary. Instead, they build and acquire leverage. According to wealth philosopher Naval Ravikant, society is divided into those who understand leverage and those who do not. In the industrial age, leverage meant labor and capital. You needed money to build a factory, or you needed permission to hire hundreds of employees. That type of leverage was guarded by gatekeepers. The modern elite use permissionless leverage. They use code and media. Software, algorithms, digital products, and content are armies of invisible soldiers that work for you 24 hours a day, 7 days a week. They do not sleep. They do not require a corporate HR department. And most importantly, they do not require anyone's permission to exist. When you own equity in a business, or when you build a digital asset, you are divorcing your income from your physical time. You are creating a positive-sum system that compounds while you sleep. A salary has a strict mathematical ceiling because you only have 24 hours in a day. Equity is infinite. The reason safe employees lose everything is because they own no equity. They are simply renting their brains out to build the founder's leverage. When the economy crashes, the founder protects their equity by firing the employee. The employee absorbs all the systemic risk while the owner reaps all the exponential rewards. To escape the fragility of the middle class, you must transition from a consumer to an architect. You must prioritize the acquisition of assets over the acquisition of a higher job title. You must build multiple streams of leverage, whether through investments, digital real estate, or owning a piece of a business, so that no single person on earth has the power to cut off your survival. The highest dividend money pays. Why does all of this matter? Why go through the intense psychological effort of rejecting the corporate path and building independent equity? Because the greatest intrinsic value of money is its ability to give you absolute control over your own time. Highest form of wealth is not a luxury car or a massive mansion. It is the ability to wake up every single morning and say, I can do whatever I want today. It is the ability to wait for a good opportunity instead of being forced to take a terrible job out of desperation. It is the ability to tell a toxic boss that you are leaving without a second thought because you do not need their fragile paycheck to survive. When you rely on a single salary, you are trading your sovereignty for a cheap hit of temporary comfort. You are proving to the world that you are a highly effective worker, but a completely vulnerable human being. You must audit your reality today. Look at your income streams. Look at your debt. Are you building an unbreakable fortress of independent leverage, or are you just a turkey waiting for Thanksgiving? Every dollar you deploy into an asset that you own is a brick in your financial fortress. Every dollar you spend trying to look rich while relying on one boss is a crack in your foundation. Poverty is a series of reactive, emotional decisions based on the desperate need for corporate safety. Wealth is a series of proactive, structured choices based on long-term survival, absolute ownership, and decentralized leverage. The system was perfectly engineered to keep you fragile by selling you the illusion of a safe job. Now it is your turn to hack the system, take back your margin of safety, build your own leverage, reject the single point of failure. Hit the subscribe button to join the minority building true sovereignty. But before you go, the debate is open. Does a traditional 9-to-5 job provide real financial safety, or is it the most dangerous risk you can take in the modern economy? Defend your position in the comments below. Let's see who actually understands the math of survival. Master your mind. Build your system. See you in the next protocol.